Welcome back to Matt's Investing Corner. Today we're diving into a company that sits right at the intersection of finance and artificial intelligence. Upstart Holding, ticker symbol UPST on the NASDAQ. So what does Upstart actually do? At its core, Upstart is a lending platform powered by artificial intelligence. Instead of relying purely on traditional credit scores like the FICO, Upstart uses advanced AI models to assess borrowers' creditworthiness. Their technology looks at over 1,000 different variables, everything from education, employment history, to broader financial behaviors, to create a more complete picture of the risk of lending money to this person. The big idea is to expand access to credit for people who might otherwise get turned away, while also helping banks and credit unions reduce losses and approve more loans. So why is this company interesting to look at as an investor? First, they are part of a massive market. Personal lending, auto lending, mortgage lending, and increasingly also more small business financing. These are trillions of dollars of opportunities, and if their AI-driven approach proves more efficient than the old-school FICO models, it could really disrupt how credit is issued in the US and beyond. Second, Upstart doesn't act as a bank itself. It's a platform business. They partner with banks and credit unions who actually hold the loans, while Upstart earns fees for providing the AI underwriting. That means that they don't carry the same level of credit risk on their balance sheet as traditional lenders. Finally, from an innovation standpoint, they are a company to watch because they represent the broader trend of AI transforming legacy industries. Whether you are bullish on them now or cautious about their volatility, Upstart is a name worth having on your radar if you're following the future of finance and AI-driven disruption. So stick around, because in the rest of this video we will break down their financials, growth challenges, and I will share personally what my view is on this interesting stock for their future. I would like to start why I think Upstart is an interesting company. If I go to their most recent presentation, they did a presentation on AI Day on the 14th of May. I have the slides here in front of me. This is the CEO and co-founder of Upstart, and he used a number of slides which I would like to quickly show you as well. So first point is help you understand the size of AI lending opportunity. So why we do this? We did not start as an AI company. They did not have AI in their initial offering, but Upstart's success is a win for consumers, lenders, and the economy, as they say. Mission-driven companies stop at nothing to achieve their goals. Well, currently the credit market is being estimated by them by 25 trillion. And they say the market is unimaginably large, and different credits can be given for home credit, credit cards, of course, auto credit, personal loans, real estate loans, small business loans. And they say at least 1 trillion in revenue is available to the platform that originates and services that credit. And they are saying that AI will bring unprecedented change as a disruption to most markets. And they want to focus on the financial part on that. Why do loans cost so much, traditional loans? They explain that quite nicely in this slide, whereby they basically say that customer acquisition, the conversion improvement reduces the customer acquisition cost by 50% by implementing AI into their offering. From people and data, automation eliminates hard cost, 66% of the cost. So basically they take out the people, the onboarding of people for getting loans, and basically they create it all on the platform driven also by AI, 66%. Credit losses. The model accuracy drives more approvals and lower rates. So that means that 36% reduction in approvals at same approval rates. So they can cover more people and handle more credit requests than the traditional ones. And obviously this will give a boost to profit because it gives economic wins can be shared between the borrowers and the lenders. So why does getting a loan take so much time and is so much effort? Well, Upstart is saying, well, there are endless applications, there's documentation requests, there are employer verification calls, they're waiting for a decision, and in-person closing. How does that AI impact the borrowing business? Well, they have basically 90% of the Upstart loans have none of each of these 5 items. And this is where Upstart can bring a completely different offering towards the customers and without having to take into account all the human interaction, which is obviously also a driver for some big parts of the cost. So let me run you quickly through their numbers, and I have in front of me the Q2 earnings from the 5th of August. And this is basically the results and outlook. Their origination is 2.8 billion. Year over year, they grew with 150%. Their total revenue is 257 million, and that grew more than 100% year over year. Their net income is 6 million, which is a GAAP profitable. And their adjusted EBITDA is 53 million and 21% margin. Upstart has a transaction volume in dollars of more than 2.8 billion, and that has grown over the last couple of quarters significantly. Year over year, that's a growth of 154%. If we look at the loan conversion funnel, that basically means that the total amount of loans that have been requested and the percentage of these loans that are being accepted. So here you can see that in Q1 24 the acceptance was 14%, whereas in the Q2 in 25 the acceptance was increased to 23%. And what was the loans were in total in the last quarter 373K. If we look at the total revenue, we can see a total revenue of 257 million, which has been growing year over year with 102% versus the quarter of the second quarter of 24. 124 to 257, a significant growth. If we look at the contribution profit, we can see that in Q2 25 they had a contribution profit of 141 million. Again, if you look at quarter on quarter, the contribution margin growth 58%, 61%, 61%, 55%, 58%. This company is growing like crazy. If we look at the GAAP net income, we can see that in Q2 25 they had the first quarter whereby they were actually making profits, whereas in the past they were still running their business on a loss while they have to develop their business model, their operating model. They finally started to rack up enough money so that they really making money and making a profit at the end of the quarter. If we look at the adjusted EBITDA, we can see a similar sort of growth. We can see that in more than a year ago, they had an adjusted EBITDA of minus 9 million. Now in Q2, they have actually a plus of 53 million. On the adjusted EBITDA, you can see that already in Q3 24, they started to have positive numbers, which is gradually growing over the last 4 quarters. If we look at the outlook, we can see that for the revenue in Q3, they're expecting 280 million. The adjusted EBITDA, they're expecting 56 million. On the GAAP net income, they expect not 6 like last quarter, but 9 million. So this company is growing. Their revenues is growing with it tremendously. And this makes, for me, this is a very interesting company to keep an eye on, especially if they have growth percentages of 40, 50, or even 60%. What is interesting to see is that they have also included a graph whereby they say Upstart AI supports skill and leads to radically better consumer experience. They are saying that by Q2 25, they were able to have 92% of all their loans being fully automated with no human intervention by Upstart. As you can see, over the last couple of years has been growing tremendously from 50, 60, 70 up to 80, 90 plus %. Of course, with every exciting company, there are risks to keep in mind, and Upstart is no exception. One of the biggest concerns right now is their rising delinquencies rates. In the past, delinquency ratios, loans through their platform hovered around 5 to 7%. But more recently, that figure has climbed to a 9 to 11%. And that's a significant jump. It raises questions about how resilient their AI credit models are when the economy slows down or when consumers are under financial pressure. Another risk is the dependency on bank partners. Since Upstart doesn't hold loans on its own balance sheet, it needs banks and credit unions to originate them. If those partners pull back during uncertain times, loan volume and therefore Upstart's revenue can take a big hit. Finally, the company is still relatively small and has shown great volatility in both earnings and stock performance. Investors need to be prepared for swings in the profitability and in the sentiment of the stock, especially in higher interest rate environment where borrowing slows down. So while Upstart has a disruptive potential, it's also a high risk play. And the recent rise in delinquencies is a reminder that innovation is lending doesn't make the company immune to the broader credit cycle. Especially if we look at the stock price performance in the last couple of weeks, we can see that it lately has been going down tremendously. And especially on the news whereby the delinquencies rate was going up, that did not do the stock price well. So let's have a look into where the stock price currently is hovering. So next I would like to deep dive a bit into the chart and the graph of this stock. Basically, I want to see what the numbers are telling me. So what I can see is that since April and May, there has been a steadily increase and basically recovery of this company in the following months, whereby it ended up at levels of 80, 85, and it went nicely upward trend whereby I was just connecting the lows and the highs together, and you could see a blue tunnel going upwards. However, in the last couple of days, you could see that it suddenly broke out of this blue tunnel and it's going downwards. And the news of these delinquencies, of having people that were not able to pay their loans anymore, and that ratio increasing was, of course, causing some stress, especially for share owners of this company. And that didn't do well on the stock. So this is now currently dropping quite hard. You can see it went from levels of $60, $70 now to levels of 52, 53. And yeah, yesterday it closed at 52.28. And the question is, where does this stop? Is this currently we're seeing a support level around $50 and $52. The question is whether the support levels will hold. Will this stock further fall down, or will it basically bounce at this level? And the question is that what I would like to see is in the next coming days is to see if these supports hold. And another thing is what you can see here is the pink line and the yellow line are the 150 and the 50-day moving average. Currently, the stock is moving below these averages. And that's something I like to see, that the opposite. I'd like to see actually that the stock is moving above the 150 and 50-day average. So that's something I should take into account by buying this stock. I have a position into this company, which I bought at levels at $60, $70. But if you do dollar cost averaging, this might be an interesting moment to start buying them on a lower end. And that's something that I'm definitely considering myself, to buy them at these levels. However, if the stock is gonna further fall, you don't want to have catching a falling knife. Basically, that might be the case for this stock currently. You don't know where the support is gonna hold up. So this is something definitely you need to take into account as in your risk management and in your own due diligence by taking such a position. This company, in my eyes, will have in the next coming years a huge and bright future if they continue the trend of developing their business and their growth. And I could see numbers that can go up to definitely to numbers of $90, $100. But if you look back of where this company is coming from, the company was originally in a certain period in 21, 22 traded at levels of $300 to $400. Do I believe it will go to that level directly back? No guarantee, obviously. But do I believe that this company can grow further to $100 to $150 per share? Yes, I believe so. And that's something that time will tell. But first of all, we need to see if Upstart can deal with these delinquencies and if the economy will further develop. This is something obviously time will tell, but in the meantime, I think it's an interesting stock to start looking into. And from this chart, I can currently see that currently we need to see where this stock is going to bounce off on the support. So in summary, what's the bottom line on Upstart? This is a company trying to reinvent consumer lending with artificial intelligence. A bold bet on changing how creditworthiness is measured. The upside is clear. If their models prove more accurate and scalable, Upstart could capture real share in the trillion-dollar market and reshape the way credit is issued. But it's not without risk. Rising delinquencies, reliance on bank partners, and the pressure on shifting economy make Upstart a volatile investment. And the technical picture adds to that caution. The stock is currently trading below both its 50-day and 150-day moving average, which is not a bullish sign, in contrary. The key support level to watch is around $50 to $52. If it holds, we may see a base forming. If it breaks lower, downside risk remains. On the other hand, any bounce will need to come with strong trading volume to show that institutional investors are stepping back in. Looking ahead, Q3 earnings in early November will be a next big catalyst. If Upstart can continue performing in line with forecast, as it has done in previous quarters, there's a potential for a rebound, possibly back towards a higher highs in 2025 in the range of $80, $90. And even into a $100 to $120 range by 2026 if they continue to grow in the same momentum like previous quarters. So for investors, this is less about steady growth and more about believing in long-term AI disruption story in finance. It's a high-risk, high-reward play that deserves careful consideration. Always do your own due diligence. Don't just look into my video and step into it as well. Look into the numbers and make a conscious decision if this is the right investment for you. As always, do your own research and never invest more than you are prepared to risk. Upstart may be shaping the future of lending, but only time will tell if it can deliver on that promise. And of course, I'll be keeping a close eye on this story going forward, and I will share you updates here on Matt's Investing Corner as things develop. I'm Matt, and this is Matt's Investing Corner, and hope to see you next time.